What we're going to do now is we're going to go through a section called Things to Remember. Things to remember. So make sure you go ahead and find that in your slides. Things to remember. This is also where you want to have some note paper to the side to take some notes. In this section, I'm going to go over things that you have to remember. Regardless of when you take the test, where you take the test, how you take the test, these are things that will always come up. I told you guys earlier that the pass rate, and you can look on BRE's website, the pass rate for this test just among real estate agents, and you don't even have to be a real estate agent to take this test, but the pass rate just among real estate agents on BRE's website, it is still about 54%. That means over half the people are failing the first time trying to take this test. The reason being, I believe, is because as brokers and agents, sometimes we think we already know everything. I can't tell you how many times people tell me, oh, I've been in mortgages forever. I've been in real estate forever. It shouldn't be a problem. They take this class online. They don't pay attention. And they just go and try to take the test because they think it's about real estate and mortgages, and they fail. Okay? You don't want to do that. So number one, I commend you guys for taking a live class, but because there's a lot of information, if you were taking this online or are taking it online, you really have to pay attention. So this part is what I call my things to remember. There are over 4,000 possible questions. You're going to get 125. You have no idea what 125 you're going to get. There's over a data bank of over 4,000 questions. You can take the test over and over again and not get the same questions. I've had some people do that. My mom, for example, she took it the first time. She got 74%.
Oh, man.
She took it the second time. She got 74%. But she said over half the questions she had never seen before. Okay, that's before we even got into the business. And then that's why I was like, well, what is so hard about this test? And that's when we kind of got into it. It's how they're asking the questions. It's the way that they're structuring the questions. And it's making sure you understand all of the different ways that they can ask the same question. This first thing that I'm going to go over with you is a perfect example of that. I'm going to say it first, and then I'm going to tell you what to highlight. If an application for credit, could be credit for a house, car, boat, doesn't matter. If an application for credit is denied based on the appraisal, ECOA, which is Regulation B, says the borrower has 90 days to request a copy of the appraisal, and when they do, the lender has 30 days to deliver it. Highlight ECOA, Regulation B. Highlight ECOA, Regulation B, and then highlight the 90 days and the 30 days. If an application for credit is denied based on the appraisal, ECOA, which is Regulation B, says the borrower has 90 days to request a copy and the lender has 30 days to deliver it. There's about 30 questions just on this one line. This is how they do that. They'll ask you which law says that the borrower has 90 days to request a copy of the appraisal. Well, there are three possible answers depending on how they write the question. If they're spelling them out, it's the Equal Credit Opportunities Act. So remember, the choices are multiple choice. The Equal Credit Opportunities Act. But what if they're using acronyms? Then it's just ECOA. But what if they're not using acronyms? What if they're just using letters, A, B, C, D? Then it'd be Regulation B. It's the same question, but three possible answers depending on how they structure it. What law says that the lender has 30 days to deliver it? Equal Credit Opportunities Act, ECOA, or Regulation B? That's 6 questions on the same thing. How many days does the borrower have to request a copy of the appraisal? If they're using letters, 90. If they're using months, 3 months. Same question. How many days does the lender have to provide it? If they're using numbers, 30. If they're using months, 1. But 10 questions on the very same thing. That's why there's 4,000 questions. That's why I don't teach you question, answer, question, answer. I need to make sure that regardless of how they ask the question, you'll be able to figure it out. Now, another way that they ask this that's not so obvious. Well, first, let's do this one. Circle the word appraisal. Circle the word appraisal. And right next to it, value. Value. By changing that one word from appraisal to value, my 10 questions just turned into 30. Because what does the appraisal give you? It gives you the value. Sometimes they'll just change one word and ask the whole series of questions all over again. Again, another way that's not so subtle on this same topic, and I'll say it and then I'll tell you what to write down. So let me say it first and then I'll tell you what to write down. They're going to ask you what law allows the borrower to challenge the value. These are my air quotes. Challenge the value stated in the appraisal. This is what I want you to write down. ECOA, Regulation B, allows the borrower to challenge the value stated in the appraisal. And then underline the words challenge the value. ECOA, Regulation B, allows the borrower to challenge the value. Whenever you hear the term challenge the value, I want you to think ECOA, Regulation B. And then they'll go through those same series of questions. How many days do they have to challenge the value? When they challenge it, how many days did the lender have to provide it? So now my 20 questions just went into 30. But it doesn't matter how they ask it. If you understand, if an application for credit is denied based on the appraisal, ECOA, which is Regulation B, says the borrower has 90 days to request a copy of the appraisal. 90 days is the same as 3 months. And when they do, the lender has 30 days to deliver it. If you know that, then they can't trick you. A lot of this test, they ask questions to try to trick you. If they trick you enough, you get to give them another $110. Who wants to do that, right? Now the next one, ECOA, Regulation B. In your sheets that I gave you there's a sheet that says list of acronyms. Take that out and put it to the side. Take out that list of acronyms and put it to the side. I call that your cheat sheet. I'm going to be referring to that for most of this part. So take out your cheat sheet, your list of acronyms, and find ECOA and highlight it. So on your list of acronyms, find ECOA and highlight. ECOA is Regulation B. ECOA stands for the Equal Credit Opportunities Act. Underline the word credit. ECOA is about credit, granting credit. And ECOA is Regulation B. How do I help you remember that ECOA is Regulation B? You're going to be learning about a whole bunch of letters, B, D, A, N. How do you keep them intact? Wherever you're taking notes, I want you to write this about ECOA. ECOA requires the regulators to be, these are my air quotes again, equal when extending credit. ECOA requires the regulators to be equal when extending credit. If you know what ECOA is all about, maybe that can help you remember that ECOA is Regulation B. It requires the regulators to be equal when extending credit. They can't discriminate. They can't discriminate because you're male and I'm female. They can't discriminate because I'm black and you're Latino. They have to be equal. That's even a question. They're going to ask you what law says that the regulators, lenders, creditors must be equal when extending credit. And that's just tip you in your head. Oh, ECOA, Regulation B. They have to be equal when extending credit. The next one on your cheat sheet, find it. HMDA, Home Mortgage Disclosure Act. Find it and highlight it. HMDA, Home Mortgage Disclosure Act. Now, HMDA is Regulation C. HMDA is Regulation C. How do I help you remember that HMDA is Regulation C? Well, wherever you're taking notes, this is what I want you to write. HMDA allows the regulators to see, here's my little quotes again, where possible discrimination is taking place. HMDA allows regulators to see, hence the Regulation C, where possible discrimination is taking place. That can help you remember that HMDA is Regulation C. They may even ask you what law allows the regulators to see where possible discrimination is taking place. HMDA is Regulation C. It allows them to see where possible discrimination is taking place. Then they're going to ask you, where do they see this possible discrimination? Meaning, where is HMDA information found? This is for your notes. HMDA information is located on Section 10, written like a Roman letter X. HMDA information is found on Section 10 of the 1003 loan application. Have you ever looked at the loan application in that section that says male, female, Hispanic, non-Hispanic, and you have to tell your ethnicity? That's the HMDA section. They call it the government monitoring section. That's Section 10 of the loan application. HMDA information is located on Section 10 of the 1003 loan application. HMDA stands for Home Mortgage Disclosure Act. It's Regulation C. It allows the regulators to see where possible discrimination is taking place. ECOA is Regulation B. They must be equal when extending credit. HMDA is Regulation C, allows the regulators to see where possible discrimination is taking place. Where do they see it? Section 10 of the 1003 loan application. The next one on the cheat sheet, highlight RESPA. Find RESPA and highlight it. RESPA. RESPA stands for the Real Estate Settlement Procedures Act. RESPA. Now, RESPA is Regulation X. How do I help you remember that RESPA is Regulation X? Well, let's just mispronounce it. Let's call it REXPA. R-E-X-P-A. Let's just call it REXPA. That helps me remember that RESPA is Regulation X. I just call it REXPA. R-E-X-P-A. Real Estate Settlement Procedures Act. Again, you're going to learn a whole bunch of letters. None of them make sense to why that's that letter. So you have to come up with something that's going to stick in your mind. ECOA is Regulation B. They have to be equal. HMDA is Regulation C. Allows the regulators to see where possible discrimination is taking place. RESPA, let's call it REXPA to remember that it's Regulation X. The next one I want you to locate on your cheat sheet is TILA. TILA stands for the Truth in Lending Act. TILA, Truth in Lending Act. And if you notice, whenever they put an A at the end, it's just the word act. TILA stands for the Truth in Lending Act. Now, in your notes, this is what I want you to write. TILA is Regulation Z. One of the biggest ones we're going to go over. TILA is Regulation Z. How do I help you remember that? We call it TILA the Godzilla. TILA is Regulation Z, one of the biggest ones we're going to go over. TILA the Godzilla, to remember that it's Regulation Z. I also want you to write that TILA deals with credit, APR, and advertising of consumer loans. What does TILA deal with? Credit, APR, and advertising of consumer loans. TILA is Regulation Z. TILA the Godzilla. Find HIPAA. HIPAA and highlight it. HIPAA. HPA. Homeowners Protection Act. HIPAA. Homeowners Protection Act. HIPAA stands for Homeowners Protection Act. It deals with PMI. Now I'm going to give you some notes, so get ready to write down what you need to remember about HIPAA. HIPAA, Homeowners Protection Act. First thing I need you to make sure you understand is that HIPAA deals with PMI, not MIP. Write that down. HIPAA deals with PMI, not MIP. They're going to try to trick you, and they're going to ask you a question about MIP, and they're going to try to throw HIPAA in there. No, doesn't go together. HIPAA deals with PMI, not MIP. MIP is on FHA loans. That's not what we're talking about. HIPAA deals with PMI. The next thing I want you to write down about PMI and HIPAA is that PMI is when the borrower puts less than 20% down. PMI is when the borrower puts less than 20% down. That's the second thing. The third thing is PMI is on conventional loans, not government loans. PMI is on conventional loans, not government loans. And lastly, PMI protects the lender, not the borrower. PMI protects the lender, not the borrower. So make sure you know those 4 things about HIPAA and PMI. HIPAA stands for Homeowners Protection Act. It deals with PMI, not MIP. PMI is required when the borrower puts less than 20% down. PMI is on conventional loans, not government loans. PMI protects the lender, not the borrower. HIPAA. Then the next one I want you to find is SAFE Act. Find it on your cheat sheet and highlight it. SAFE Act. And when you find it, I want you to circle the word secure. That's the biggest thing that people do wrong in this test. This is called the SAFE Act. And they're going to ask you on the test, the SAFE Act stands for A, B, C, D. And the first one says it stands for the Safe and Fair Enforcement Act. It does not. Don't let them trick you. Yes, it's called the SAFE Act, but it stands for the Secure and Fair Enforcement Act. Underline that, highlight it, whatever you need to do. I just had a person in the next room that says they tricked me. When I got there, I said the SAFE Act stands for the Safe and Fair Enforcement Act. That is incorrect. It stands for the Secure and Fair Enforcement Act. And then the next one, HERA. HERA, find it on your sheet and highlight it. HERA. HERA is the Housing and Economic Recovery Act. HERA, Housing and Economic Recovery Act. And make yourself a note. HERA is the law that created the SAFE Act. They're going to ask you that. What law created the SAFE Act? HERA is the law that created the SAFE Act. Or they may ask you what came first. HERA, because HERA created the SAFE Act. Next slide, FACRA. FACRA. The biggest thing that people do wrong with FACRA is they don't know what the FCRA stands for. You have to know that FACRA is Regulation V, but FACRA stands for the Fair Credit Reporting Act. FACRA, Fair Credit Reporting Act. You must know that. Now, in your notes, what does FACRA deal with? FACRA deals with credit reports and credit reporting agencies. FACRA deals with credit reports and credit reporting agencies. Credit reports, I'm sure you all know what that is. Credit reporting agencies, what do I mean? Equifax, TransUnion, Experian. FACRA deals with what they can and cannot do. And we'll get into details about that later. But FACRA stands for the Fair Credit Reporting Act. Next one, FACT Act. FACT Act, find it, highlight it. FACT Act. Again, what does the FACT stand for? Fair and Accurate Credit Transaction Act. The FACT Act. And for your notes, what is the FACT Act all about? The FACT Act deals with identity theft. The FACT Act is all about identity theft. The FACT Act also has a section of rules called Section 114 rules. Those are red flag identity theft rules. So I'm going to say that again. The FACT Act deals with identity theft. The FACT Act has a section of rules called Section 114 rules. What are Section 114 rules? Red flag identity theft rules. FACT Act, all about identity theft. The next one, and there's going to be a lot to write on this one, so get ready. GrammL Bliley Act. GrammL Bliley Act. Most people don't even know that these are senators. Senator Graham, Senator Leach, Senator Bliley. So I want you to think about protection. when you think about the senators. Their job is to protect the people in the community. So you notice I have their SPF, like for skin protection, because you need to know the 3 laws or the 3 policies that are required by the GrammL Bliley Act. SPF, safeguarding, pretexting, financial privacy. They like to say the GrammL Bliley Act has SPF, a safeguarding policy, a pretexting policy, and a financial privacy policy. On the question they're going to ask you, they're going to say, which of the following is one of the policies under the GrammL Bliley Act? Which one is not? You're looking for those that begin with SPF, safeguarding, pretexting, financial privacy. So now we're going to break it down. What is a safeguarding policy? I'm going to talk about a safeguarding policy. So one question you may get is, what law requires that there be a safeguarding policy? Now you know, the GrammL Bliley Act. Then they're going to ask you, what is a safeguarding policy? This is what you're going to write. Ready? A safeguarding policy is a policy on how they're going to keep our credit card information safe when we use it in their stores. Companies that take and use credit cards, they have to have a policy, just like an employee policy or whatever. They have to have a safeguarding policy. Well, what is a safeguarding policy? A policy on how they're going to keep our information safe when we use it in their stores. When I go to Target or Sears or Olive Garden or the gas station and I use my credit card, I should feel okay that it's safe for me to be able to use it, that no one's going to hack my account, because they have some kind of a policy on what they teach their employees on how to keep our information safe. When Target got in all that trouble with the whole credit card scams, first thing the Fed said is, let us see your safeguarding policy, because they wanted to see if they were following it. Because how did that happen? Safeguarding policy, a policy on how they're going to keep our information safe when we use it in their stores. What law says that they have to have one? The GrammL Bliley Act. The next policy is a pretexting policy. So I'm going to tell you what that's all about, a pretexting policy. A pretexting policy is simply a policy to keep others from gaining your information under false pretenses. Then underline the word false pretenses. So I'm going to say that again. A policy to keep others from gaining information or access to your information under false pretenses. And underline false pretenses. Then I want you to put in parentheses the word pretenders. People pretending to be you and getting your account. A pretexting policy is like when you lock yourself out of your bank account online or something. They'll say, well, what's your mother's maiden name? And what's your high school's girlfriend name? Or what's those questions that they ask you before they let you back in. Pretexting policy. A policy to keep others from pretending to be you and gaining access to your information. There has to be a pretexting policy. Financial privacy policy, probably the most important one under the GrammL Bliley Act, financial privacy policy. You're going to write exactly what I say. What this policy does is it governs the collection of non-public information and how it's shared with affiliates. So I'm going to say that again. The financial privacy policy governs the collection of non-public information. Then underline the words non-public information. Governs the collection of non-public information and how it's shared with affiliates. And then I want you to put in parentheses, opt-in, opt-out. So what this policy does, a lot of the companies, if you notice, they're affiliated with a bunch of other companies. They take your information and they share it. That's why you get a bunch of spam, or you get all those extra flyers in your mail. They're sharing. Like Chase is associated with Providian, so I get offers from Providian. Providian is associated with this company. I get offers from them. The GrammL Bliley Act governs what they can collect, governs the collection of non-public information. When you fill out a loan application or a credit application, you give them your bank account numbers, your social security, all your non-public information. This law governs what they can collect and it also governs what they can share with their friends, their affiliates. And it gives you the opportunity to opt in or opt out of having your information shared. So they're going to ask you that. What law gives you the opportunity to opt in or opt out? What law requires that there be a consumer privacy policy? They have to tell you what they're going to do with your information when they collect it. The GrammL Bliley Act. So the GrammL Bliley Act has SPF, Safeguarding Protecting Financial Privacy. The next one on your cheat sheet, HOPA loans. HOPA loans. Find HOPA. What does HOPA stand for? Home Ownership and Equity Protection Act. HOPA. Home Ownership and Equity Protection Act. I call them hard money loans, like what you get at Cash Call or Rise or some of those, very high interest rates. There's several HOPA loans, but for the exam, we only care about HOPA Section 32 and HOPA Section 35. HOPA Section 32 and HOPA Section 35. HOPA Section 32 are called high cost loans. I'll talk a little bit later about what makes it high cost, but you need to right now associate 32 with high cost. HOPA Section 35 loans, excuse me, are high priced. I'll talk a little bit later about what makes it high priced. But right now I just want you to get 32 because they're going to try to trick you. 32 is high cost. 35 is high priced. I'll tell you what makes one 32 or 35 a little bit later. But I do want you to know that all HOPA loans are a part of TILA. One of the things that make TILA the Godzilla. HOPA loans are a part of TILA. So you'll get questions that say, HOPA loans are a part of which larger law? TILA. Section 32 loans are part of which larger law? TILA. High cost, part of which larger law? See how many? That's how they come up with so many questions. Section 35 loans are part of which larger law? They're all a part of TILA. One of the things that make TILA the Godzilla. AFBA or ABA, affiliate business arrangement. What I want you to do on this slide, first find it on your cheat sheet and highlight it, but I need you over there where it says this 1%, put yourself in parentheses, not 10%. Not 10%. Affiliate business arrangement disclosure is a disclosure that you have to give your client if you're referring them to a business that you have part ownership in. And now you're going to be making money off of them in more than one way. For example, you're doing a loan with me, and you say, Tricia, I could use a roofer. And I look and I said, oh, here, use this company. If I own a part of that company that I'm referring you to, I have to disclose it. Because now I'm going to be making money off of you in more than one way. There's a question on the test that says, if I own more than what percent am I then required to disclose it? People are picking 10, but the answer is 1. The answer is 1. Then they're going to ask you, when must you disclose it? The answer is immediately. If that's one of the ABCDs, immediately is there, then you have to pick immediately. If immediately is not there, you're going to pick the one that says prior to doc signing. Prior to doc signing. But what if they have A, B, C, D, and they have immediately is A, prior to doc signing is B, and something else for C and D? You're going to pick the most correct answer, so that answer is going to be immediately. If immediately is not there, what's the next best answer? Prior to doc signing. Sometimes they won't say immediately, they'll say at the time of referral, or they'll say right away. That's what that means. Civil Rights Act, any question you get, I don't care what it is. Any question you get about the Civil Rights Act. They'll try to throw you off by putting different years and stuff there, but Civil Rights Act is about race. The answer is going to be concerning race. Back in 1866 when they made the Civil Rights Act, it was about race discrimination, not age, not gender, not sexual orientation, race. They'll try to trick you though, okay? So here's how they trick you. They'll give you these two questions. One will be around number 30 and the other will be around number 125. And you'll think it's the same, but it's not. They'll say, which of the following can you not discriminate against? Age, race, religion, all of the above. Which of the following can you not discriminate against? age, race, religion, all of the above. Well, in that instance, it's all of the above. But then later, when you're tired, they're going to ask you another question. They're going to say, which of the following, according to the Civil Rights Act, can you not discriminate against? And you're going to be like, oh, a free question. It's not the same. This time they threw in there, according to the Civil Rights Act. Which of the following, according to the Civil Rights Act, can you not discriminate against? Age, race, religion, all of the above. Well, that time you have to say race, because they threw in there according to, they're trying to trick you. Again, if they trick you enough, that's why you have to do all 10 of my practice tests and everything that I give you in the links when you come to the crash course, because I trick you as many times as they have. So if you can get through me, then you should be okay. Okay? Do you see how that's different according to the Civil Rights Act? Then it has to be race, because the Civil Rights Act is about race. Another way that they do that is they'll use these three here. An escrow account. You guys should know that that's the same as an impound account, same as a reserve account. An escrow account is the account where the lender sets up to take your money for your taxes and insurance. Some states call that escrowing your taxes and insurance. Some states call that creating an impound account. Some states call that a reserve account. I had one lady say she answered all three a different way because she wanted to make sure she got at least one right. No. You're going to be doing loans in multiple states. They want to know if you know the lingo. Some states say, I'm going to create an impound account for you, and I'm going to impound your taxes and insurance, or a reserve account, or simply an escrow account. You do need to know what type of a mortgage does it create. If it's escrowed or impound or reserved, what type of a mortgage did it create? Write this down. It creates what's called a budget mortgage, B-U-D-G-E-T. A budget mortgage, which just simply means a mortgage that has budgeted for P-I-T-I. So if it's escrowed, it created a budget mortgage. If it has an impound account, it created a budget mortgage. Reserve, budget mortgage. Budget mortgage just simply equals a P-I-T-I mortgage. A mortgage that when you make the payment, you've paid the principal, interest, taxes, and insurance. So that was our warm-up. We haven't actually started the class yet. I'm going to give you guys a break, and then we're going to come back and start today's class. But you should be sufficiently warm, right? Right?